When the numbers on the screen finally stopped flickering, a quiet alarm rang across the globe. The United States, the engine of post-war prosperity, is showing the first unmistakable signs of a slowdown that could reshape the world order. What does it mean when the world's largest economy begins to lose its footing? The question isn't just academic, it taps into the psychology of confidence that underpins every market, every loan, every family's savings. In the first quarter of 2025, real GDP growth in the United States slipped to 1.3%, the weakest pace since the 2009 crisis, while global growth edged down to 3.1% for 2026, according to the IMF. Simultaneously, Washington's assumption of the G20 presidency in 2026 was framed as a quiet move to steer the agenda. Yet analysts note a 40% decline in coordinated policy releases since 2019. For the average household, this isn't just a headline. A slower U.S. economy means tighter credit, higher borrowing costs, and a dollar that's losing a fraction of its global allure. When the dollar's dominance whips, the price of everything, from gasoline to groceries, feels the tremor. Investors, already jittery from erratic tariff announcements, are pulling back, creating a feedback loop that amplifies market volatility. The world watches as the United States prepares to host the G20 summit, a stage set for either a renewed assertion of leadership or a subtle concession of influence. Yet, as the opening gulf of the summit looms, a new data point emerges. The share of global trade settled in dollars has fallen below 60% for the first time in decades. The question hanging in the air is simple. Will this be the moment the crown begins to tilt? Behind the headlines lies a web of financial architecture that most viewers never see, and it's being rewired in real time. What are the gears that keep the dollar atop the global reserve hierarchy, and why are they now rusting? The answer lies in the interplay of sovereign debt, trade invoicing, and the psychology of anchor currencies. The United States now carries a debt-to-GDP ratio of 123%, a level that would have sparked panic a decade ago. Yet the market's reaction has been muted, not because the numbers are ignored, but because the very institutions that once enforced dollar dominance, the IMF, the World Bank, and the Federal Reserve, are being nudged aside by alternatives. The Asian Infrastructure Investment Bank and the New Development Bank now fund projects that bypass traditional corridors, and China's yuan is increasingly accepted for oil payments, chipping away at the petrodollar's foundation. For central banks and multinational corporations, the stakes are psychological as much as financial. The anchor effect, where institutions hold dollars because everyone else does, creates a collective belief that is fragile. When that belief erases, the cost of borrowing spikes and capital flows shift towards safer, perceived alternatives. The ripple effect touches every loan-dependent sector, from housing markets in Toronto to manufacturing floors in Stuttgart. But here's the part nobody expected. The very architects of the post-war order are now quietly drafting a new rule book, one that could rewrite the terms of trade, finance, and influence. The question is, who will write the first chapter? Across oceans and continents, leaders are watching the United States with a mixture of hope, caution, and quiet calculation. How do other nations interpret America's waning economic vigor, and what historical patterns can illuminate their moves? The last time a dominant power faced a comparable shift was in the 1970s, when the United States abandoned the gold standard and the oil shock reshaped global finance. Today, Europe, Japan, and India are positioning themselves as steady hands, while China accelerates its Belt and Road initiatives, offering credit lines that sidestep Washington's sanctions. The G20 summit in 2026 is being framed as a critical juncture where coordinated action could either revive multilateralism or cement a transactional future. Behavioral economics tells us that loss aversion drives nations to cling to familiar partners, yet the prospect of loss also spurs innovation. Countries that once relied heavily on dollar-denominated trade are testing alternative settlement mechanisms, fearing a future where the greenback is no longer the default. This shift isn't just about currency, it's about strategic autonomy, control over data, technology, and supply chains. It gets deeper when you see which nations are already signing bilateral swap agreements with the yuan, and how quiet diplomatic corridors are being used to negotiate new energy contracts that bypass the traditional petrodollar system. For families counting pennies at the grocery store, the abstract tremors of global finance become a concrete reality. What does a potential loss of economic leadership mean for everyday people, and what are the media narratives that are missing the point? A slower U.S. economy translates into higher mortgage rates in Canada, more expensive imported goods in Europe, and a tighter job market for tech workers in Bangalore. The OECD projects global GDP growth to stay at 3.3% in 2025 to 2026, but warns of significant challenges, including high public debt and geopolitical tensions. Yet the conversation rarely mentions the quiet rise of regional trade blocs that could re-anchor supply chains away from the United States. From a behavioral standpoint, people tend to overreact to immediate price hikes while underestimating gradual systemic shifts. This present bias leaves many unprepared for the long-term implications of a rebalanced economic order. Moreover, the media's focus on short-term market swings obscures the deeper structural changes, such as the diversification of reserve holdings and the emergence of new financial infrastructure that are reshaping the global landscape. Because while everyone is fixated on the headline-grabbing numbers, the real transformation is already unfolding, quietly and in a place no one expects. Stay tuned for the next episode where we'll reveal which hidden market is already betting on the new world order.